Hello world, my name is Zara. I'm a full stack web developer with a passion for investing. Today I would like to talk about two companies that I am either thinking about investing in or thinking about investing more in. And they are growth companies with a currently very high valuation, which is giving me some hesitation. But in the long term, I think these two companies are winners, which is why I'm thinking about investing for the long term. So, the first one that I'm thinking about is Under Armour. I already own shares of Nike, as does my girlfriend, as does my daughter. But Under Armour seems like the high growth opportunity. Right now, I know that analysts are worried because growth is slowing. And Under Armour has dropped from about $45 a share to about $19 a share. So, historically, compared to the last couple of years, this is a very, very low share price. But it's for good reason, because growth has slowed. So the question is $19 a value, which is still very high compared to what they're earning? They're still priced like a growth stock, just not like a ridiculously fast growth stock. Or is this kind of a value trap? Because am I just thinking $19 is a deal because it was $45? And little do I know, maybe it will drop to $10 a share in the future, if this truly is not a growth stock like I'm thinking. But Under Armour has about 10% of the market cap of Nike. What that means is, compared to Nike, Under Armour is about 1/10 of the size, which is very, very small in my mind, since this is a company that can sell clothing and shoes to the entire world. So, should I invest in Under Armour at about $8 or $9 billion market cap? I think that if growth starts to pick up with this company, why can't this become a $50 billion company? Why can't I get 5 times my money on this stock? So, I would love to know what you think. Even though growth has slowed, I think that this is short-term in the concern category. I don't think this is something I really have to worry about long-term. If I plan on holding this stock 5 to 10 years, I don't think I have to pay attention to this quarter or last quarter. So, tell me what you think. At $19 a share, is Under Armour a value? Coincidentally, my next stock is about $19 a share. Also, it seems like I tend to think of companies that are a similar share price, which is completely coincidental. I don't think I'm consciously doing it. But Deluth Trading Co, around $19 a share. I currently own 500 shares of Deluth Trading Co. I bought them at $17.90, and I originally bought 900 shares and sold 400 of them for a nice profit. But at $19, I decided to hold 500 shares, which is about $9,500 worth of stock, which is plenty of stock for me to hold. So this company, similar to Under Armour, was much more expensive, and I wasn't interested at the higher share price, in the 30-something range. But at $17.90, I thought this was too good of an opportunity to pass up. Currently, they are trading for a PE ratio of 31, which is very, very high, and a forward PE ratio of 24, which is also on the high side. But there's good reason for that. Deluth Trading Company is opening up retail outlets to sell all their clothing, all their shirts, all their underwears, all their pants. I love their commercials, which is how I first heard about the company, and I have not bought one of their products yet. Although since their sales are growing at an average of about 23% a year, I think that other people are, and since their sales are growing so fast, I think there's also new people every year or every quarter that hear about the company and buy clothing from them. So I feel pretty safe in my investment, and when I get around to it, I probably will buy something from them. But for now, I'm just buying the stock. So my concerns are that Deluth started as an online company, and now they are building physical brick and mortar stores. So this seems to be the opposite focus of a lot of companies that have a lot of brick and mortar stores, like Target, which is trying desperately to start selling stuff online, and Walmart, same thing. Instead of building lots of new stores, they're focusing on online. Home Depot as well. So anyway, Deluth Trading Company, yeah, so they have built something like 15 stores. I forget the exact number. I think it's 16 stores. It's actually hard to tell the exact number because until they come out with their quarterly earnings, we won't know exact. but their target is going to be 100 stores. So for a very small company with a market cap of only $500 million, building so many stores so quick is costing them a lot of money. Now, they're doing it for a good reason, it seems, for multiple different good reasons. One is their retail stores are kind of a showcase for their clothing. And after some time that they have some presence in the area, whatever city they're in, they end up selling more stuff online. So it's working as a showcase. The other thing that they're doing, seems like they're doing correctly, is they're selling enough stuff in their stores to make the stores very profitable. They're averaging $450 per square foot, which is less than what Nike sells, but it is not much less. It is higher than many other retail stores, and the stores are very profitable. So their stores also have a very small footprint. The average is from 10,000 to 12,000 square feet, which for an outlet store is on the small side. It's nowhere near like Burlington Coat Factory or a big store like that. So the stores are very small. They're acting as a showcase for their products. And really the two main reasons why I invested in this company, though, is because, one, I just love the commercials. I missed out on investing on Sam Adams beer when Sam Adams had less than 1% of the market share for beer. And I wanted to invest in them because I love their commercials so much. I knew people would see the commercials and want to try the beer. And Deluth Trading Company, I think there's so many people that haven't seen the commercials yet, but the commercials are so effective. They're slightly funny, they get their point across, they show you why you should be buying clothing from Deluth Trading Company. Symbol is DLTH, by the way. And the commercials are just so great that more people are going to have to buy clothing from them. And some other points are that this is a very small company. At $500 billion, it has lots of room to grow. And it is mostly an online company, which I think is a great idea because it is very, very easy to grow sales online. Or I should say very easy relative to retail locations. But they are burning cash right now. Currently, their revenue is growing by 23%, but their earnings are growing very slow, or in fact, negative last quarter. And the reason is because they are spending so much of their money to build new stores. I read that they are spending an average of $600,000 on each new store. And for a company that is making a few $1 million a quarter, spending $600,000 a pop is very expensive. So I do think that this company is a long-term winner. I think they are building stores for the right reasons. I think once the stores are up and running, that they become very profitable and they will make online sales more profitable. So let me know what you think. Under Armour, symbol UA, and Deluth Trading Company, DLTH, both in the $19 per share ballpark, both considered growth companies based on revenue, both slightly different business models, but I would say somewhat in the same category. I don't know if they're targeting the same consumers. Under Armour would be targeting more of athletes, and Deluth would be trading more people that want to wear clothing that makes sense. They don't want their sleeves to go up. More sensible clothing. So let me know what you think. Please leave me a comment. I don't even know if the comments are working in YouTube, but thanks for subscribing, thanks for listening, and I will talk to you later.